All right, do we have Amar with us? Yeah, so Amar Singh is the head of advisory at Angel Broking. He joins us right now. Amar, thanks for joining us. What are your thoughts about this resuscitation of the rally, let's say, in sugar? Because the momentum is very, very strong today, and the entire group of sugar stocks started to make that move.
Yeah, very good morning, Ashu. As you rightly said, we are seeing a positive movement in the sugar stocks, and be it Renuka Sugar, Balrampur, Bajaj, we're seeing an upside apart from other sugar stocks as well. So yes, what we had seen earlier was profit booking, and also because the stocks had run up significantly, and now they're taking support. As far as Balrampur Chini is concerned, it's currently trading around 111. And with a support, it has a crucial support of 102 and a resistance of 120. So once it starts trading above the 114 levels, then we could expect it towards 120. But my point here is that sugar stocks, the rally that we have witnessed earlier, maybe we wouldn't see a similar sort of rally. But yes, some pullback is expected, so profit booking also should be initiated. As far as Renuka Sugar is concerned, that's trading more or less sideways, currently around 16.8. So on the downside, it has 14.9 as a support, and resistance on the upside at 17.2. Whereas Bajaj Hindustan is concerned, it's currently around 17.8. So, and it has a support of 16.5 and a resistance of 19. So these resistance levels are going to be really crucial as far as Balrampur. As I said, 114, if it starts trading above 114, we could see a 4 to 5% rally immediate towards 119, 120 levels.
Right. So let's just bring up a couple of financial services stocks. Let's start with IIFL Holdings. 1 year charts, Smita, if you can just take a look at those. Bharat Financial Inclusion. We'll also take a look at Reliance Capital and Muthoot Finance. So you can see the charts, I mean, they're stabilized, and in fact IFL was heading into major support levels. It was starting to crash, but again today we have an up move. But I'd be careful about the up move because it was heading towards a support. Now, so Bharat Financial is concerned, it ran into some kind of a channel, maybe a downward sloping channel, but it was a channel. Let's bring up Reliance Cap and then Muthoot Finance, and we'll see the difference in the charts, how different each chart really stands out. So in Reliance Cap's case, as you can see, absolute clear trend, and the trend starts to even accelerate even more towards the end. So technically that's a great sign, because not only is the trend accelerating, it's giving you a time confirmation and a volume confirmation. Again, Muthoot Finance went into some kind of a range or got stuck in a channel. So when I brought up 4 stocks, all very different. IIFL almost looked like it was going to head into a very sharp support, much below its levels now, maybe 220, 210, but again today we saw a little bit of move. Bharat Financial Inclusion seemed to be almost in a downward sloping chart, and Muthoot stuck in a channel. Reliance Cap, on the other hand, its angle of ascent started to even appreciate more. Your thoughts on all the 4 if I wanted to stick to momentum?
Yeah, as far as all the 4 are concerned, be it Reliance Capital, IIFL Holding, Muthoot or Bharat Finance, Reliance Capital still continues to be the best in terms of if you look at the chart. So, and if you see the correction also that has happened in other stocks, be it Bharat Financial, IIFL or Muthoot, we've seen them correcting significantly. Whereas Reliance Capital, if you look at it, it's corrected marginally, only from 586, currently trading around 567. Whereas if you look at IIFL, almost from 310 levels, it's corrected to as low as 240, right now around 259, 260. So overall, Reliance Capital still appears on the strong side, technically on the charts. So I think if one has to invest in these stocks, in Reliance Capital would be a good bet. The support for immediate support for Reliance Capital, crucial support, a major support you can say is around 530, 535 levels. Once it takes out the 585, 590 levels on the upside, we could see the next leg of rally. And IIFL, this could be just a short covering sort of, because it's going to meet with stiff selling pressure coming around 280 levels. And as far as Bharat Financial is concerned, it's currently around 775, so 800, 805 levels would be a resistance to watch out for. Only above 835, 840 could you see the next leg of rally in Bharat Financials.
Right.
Muthoot Finance, we have it trading close to 349 levels. It has a major resistance around 380 levels, so that doesn't look to be breached in the near term. So that's it on the financials.
Right. So, if you have paper and a pencil, just keep these stocks in, just hearing a stock and rushing will not do it. You will just have to personally get used to where is the chart even appreciating, is it in a breakout, has it broken resistances, even just to get into college there are 12 grades. It's not as simple. Somebody mentions a stock, you buy it, it's a recipe for disaster. So please, that's why I request you keep a paper and pencil, because I usually try to indicate to you where in the movement is the stock. That's very important. You do that for about a month or two, you'll see how good you become at it yourself. So just please do keep a paper and pencil. Now, Shamila, good morning. I just wanted to bounce off financial services stocks. Now, we don't have any benchmark for insurance. So how do we look at this IPO?
Yes, absolutely. I think one good benchmark of looking at any of NBFCs or whether you want to look at the insurance spaces. I mean, insurance has come to a little later, but NBFCs, I think largely the way their books have grown. They've all been through their shares of trouble, but I think now what's working in their favor is, one, the regulations are now sorted, and things have been made a lot clearer on how they can proceed ahead. And somehow they've managed to find that gap, where banks were not able to service and there was a requirement, and they've been able to really scale up their businesses because of that. And even if you look at NPA levels and compare them with, say, any banking stock, you'll find that the NPAs for all these NBFCs are really marginal and quite low. So it seems to suggest that retail has in fact been better at servicing their debt than corporates have been. So I think that is why there's been this new enthusiasm for NBFCs, and you've seen their outperformance. And I think that's likely to grow. But maybe going forward, you need to have a slightly differentiated play, and I think that will become clearer with time. Insurance, I agree. I think there's not much that we can do to really evaluate in terms of share price. But I think you just have to look at how businesses for a lot of these insurance companies have grown over the past. Ever since we've had these private insurers come into play, and definitely, I think whether it's the Pru ICICI, the Prudential insurance, or the Bajaj insurance, or the SBI life insurance, these are businesses that have really, if you look at their book size, it's really grown. And in terms of if you look at it as a percentage of the number of people insured to what it is in other more developed countries, you'll find that there is still a very large gap. So, I think that's really the way to look at that business, because it takes a lot more time for an insurance company to really start making money.
All right, I'm going to show you 3 sets of stocks, if I may, so that you can see for yourself why it is very important to you can see the same 10% gain in 2 different stocks. And one stock is not worth a buy, another one may be totally worth a buy. But that you can only see if you can see the difference in the chart. So I'm going to put up a chart called alkyl amines. You have that one? ALKYL, alkyl amines 1-year chart. I want you to, alkyl amines, AMINES. So, you see this excitement about these chemical stocks. You see a pattern like that and you see why the stock can't really be bought. Now see how many times the stock goes into an accumulation distribution pattern. Why does it happen? Because there are not enough buyers and sellers. Maybe 1 or 2 guys are trying to buy, 1 or 2 guys are trying to sell. What money are you going to make with a chart like this? I mean, just see it yourself. You wouldn't know when to get in and you wouldn't know when to get out. So whoever knows, let them stick to it. You don't have to be, there is no reason for you to finance it. Let somebody else do it. Now let me bring up a couple more. Nitco and Murdeshwar Ceramics. Can we bring up Nitco? Now you'll see difference in that chart pattern. In 1 year, see how different. You have to find a nice, smooth chart pattern that's going up. So here also it moved up, then stopped, but it didn't go down. This is what we call higher tops and higher bottoms. It continued to run up. So that chart we'll also check. Let's take Murudeshwar Ceramics, Polyplex and Thirumalai Chemicals. So I'll show you all the charts, then we'll go to Amar and just check out with him what he thinks about each one of them. You have Murudeshwar, yeah, so beautiful chart on Murudeshwar, even better than Nitco. Polyplex and Thirumalai. So Polyplex again was in some kind of a channel, broke out, and Thirumalai Chemicals, that chart seemed to have been running for a long time. So you can't just buy any chemical stocks. Alkyl amines is a horrible chart, and Thirumalai has a beautiful chart. That's the difference. Now they may have the same gain, but you have to know which chart to go after. Amar, your thoughts? I brought up Thirumalai, Alkyl amines, Polyplex, Murudeshwar and Nitco.
Yeah. Overall, as you rightly said, definitely we should be looking at stocks which are liquid and which are trending, because we are not in the markets to fight the markets. We are in the markets to look out for those stocks which are trending, which are strong, which have liquidity. And as you rightly pointed out, the Tirumalai chemicals, if you look at it from a long-term perspective, it's rallied significantly from almost in the third week of February. So it was around 124.25 levels. It's rallied currently to around 580 levels. So it's been a one-sided rally, and once the breakout above 285-86 levels was visible, it was a clean rally from that level. So it's almost doubled from that level. As far as alkyl amines, as you said, it's completely a no-brainer. One shouldn't be looking at it because it's completely range bound, 260 on the downside, 375, 380 on the upside. So that's a no-go area. If you look at Polyplex, again, Polyplex, we've seen some upside, but it's again a question of liquidity, whether the stock is liquid or not. It has technically taken out a level of resistance level of 320-25 levels. As far as Nitco is concerned, Nitco continues to trade high. I would say it's at multi-year high levels and currently around 73 or so. So it all boils down. And if you look at Murdeshwara Ceramics, it again has rallied from almost 17-18 levels to 32-33 levels. So the key point, if you look at all the stocks, Tirumalai definitely chemical stands out. And also, the 2 points that needs to be, I would say, remembered by every investor. One is that there has to be ample liquidity in the stock, one. And secondly, if the stock is trending and it's taken a major resistance level out, then that could be a good level to enter.
Yeah. I have a couple more stocks. I'll just come back to you in a moment. But I wanted to look at Raymond and Arvind. Sharmila, what are your thoughts on Raymond and Arvind? Very different business models. But in Arvind's case, you have more newer age models with them, Zara's, Gaps, where most younger people seem to go there. I mean, Raymond, I don't know. I mean, and also, you tend to make suits once in a while. Where would you, if you had to make a choice between Arvind and Raymond at the moment?
Oh, absolutely, I think Arvind. I think precisely for the reasons you highlighted. I think that both, overall, if you look at the way the entire textile sector is, there is a sense of tiredness in some of them. And I think Arvind has been one of the few stocks which has tried different things. Some have worked, some have not worked. But I think over a period of time, they've built a good sort of basket of brands that they represent, etc. So I think that's the way to go. And for me, if I had to pick between the two, it would definitely be Arvind.
Okay, let's go through IL&FS Transportation. I'll put that stock for you. And now we'll look at Raymond and Arvind from a technical perspective. You'll see how much difference there is between those two. Is this IL&FS Transportation? So, looks like it's finally breaking out of many multiple resistances. And if you look at Raymond also, it's breaking out of a channel. It started to go down, but fortunately it made what we call a higher bottom. It didn't really go back to its old level. That's a good sign. Now let's look at Arvind and see if that chart is totally different than these ones. And here's Arvind for you. So Arvind again is very close to breaking a resistance. Now the difference between Raymond is Raymond's already broken those resistances and moved on. Arvind has to break them. And IL&FS has broken multiple resistances. So that's very different charts, but we'll see which ones work out best for you. Amar, you got to comment on this, because this IL&FS Transportation looks more like a day trade because it's just gone into a 90-degree angle. But between Arvind and Raymond, what do you make out as a trade?
Yeah, if we look at Arvind and Raymond, yeah, definitely Raymond, the way it has, if you look at today's move in Raymond, that's been an exceptional move, almost up by 8.8% from almost 474 levels to 524 levels on the upside. So that's been a spectacular move. The key question is, does it hold? Will this move that is today, will it hold? Because as you rightly pointed out, Raymond has taken out a key resistance level of around 494 levels, which was in the first week of June. Whereas if you look at Arvind in the same period when it had made a high of 344 levels, that level has not been taken out. It's trading lower at 336.37. So from a technical perspective, yes, Raymond has reached that level. The key question is today's closing is going to be crucial. and the high of today is also going to be crucial. If that level is breached decisively and it trades above these levels, 515, 520 levels, then we could see some rally towards 550 levels, 575 levels for Raymond.
Right. All right. I was looking at 2 or 3 other stocks. Let's bring up this stock called PPAP Automotive. If you can get it, Smita, new stuff comes up every day. So, but anyway, it's PPAP Automotive. We'll also look at McDowell Holdings, and we'll look at this UB Holdings. Sharmila, could you just help us out with this? Who is holding this United Breweries? Because there is a UB Holdings, there's a McDowell Holdings, there's United Spirits. I mean, who's running that place, and what are all these other companies?
I'm sorry, I too don't have too much clarity, but I do know that Heineken has a fairly large stake, and I think that's what sort of keeps people interested in United Breweries, because there's always talk that if there is, if things should like work out in favor of Heineken, then they would really make a bid to get a better shareholding in that business. And definitely, I think in terms of profitability as well as future sort of ramping up, I think that's would be the business to have really in that basket. I mean, even if I were to choose between United Breweries and United Spirits, though I mean, of course, now United Spirits because of this Diageo takeover and all that, is being valued in a different way. But to my mind, I think United Breweries is also a great business, because I think that market for beer is also a growing market. So I think, that's the reason. I'm not too sure really, but of whether UB Holding, McDowell Holding, that's the sort of reason why people like the stock.
So, just in case sometimes you get confused between fundamentals and technicals, just take a magnet and put it near the wrong pole of the magnet near a metal, or 2 magnets together, they'll repel each other. So just the same way, in the stock market, the traders and investors are there, but it's possible that they have to make totally different decisions based on what they see. And I'll show you 4 stocks like that. 4 stocks that you can exactly see why the fundamentals are different and the technicals are different. So Sharmila, let me start with this Bombay Burma Trading Company. First of all, it's a holding company for Britannia. But I was reading it also has about 14-15% of this Bombay dyeing. In addition to that, they have thousands of hectares of coffee plantations and tea plantations. So it's not just a pure holding company. What are your thoughts? And in terms of discount to market, it's still trading at a discount to market, in terms of what it holds. Your thoughts on this Bombay Burma?
No, obviously, I think, looking at their holding in Britannia and etc., the plantations, etc., make this you would expect that this sort of holding discount would also close. But in my experience, in bad markets, this sort of discount just goes back to where it was. So you need to be able to spot it at the right time, even, if you're a fundamental investor, because, that while it may look at this point in time that the discount gap could close further, and it might. But I would still really prefer the businesses that it has holdings in rather than looking at Bombay Burma. So I think for me, Britannia would be the stock to buy as opposed to Bombay Burma.
Sure. So excellent point, Sharmila. I also wanted to bring up that, when we look at something fundamentally, we look at it very differently. Now I'll ask Amar, and you will see how different his thought process will be because he's seeing a chart. Nothing wrong. Same market, same stock. But that's why I say please don't confuse this fundamental and technicals, because that's where the problem starts. So Amar, I wanted to bring up Bombay Burma first. Let's put up that chart, 1-year chart. Then we'll also look at UB Holdings. We'll also look at McDowell Holdings and also PPAP Automotive. You have that one? Okay, doesn't matter. So Bombay Burma, just see what's happening. It's going into a 90-degree ascent. McDowell's. Again, McDowell's was actually stuck in a channel for the longest time. It broke off. Now, do I have a time confirmation here? No. Can I say to you for sure that now the time proves that it's going one way? No. United Breweries, on the other hand, I do have a time confirmation. But the problem with this stock is it's not broken long-term resistances. So maybe a day trade, but it certainly is not a long-term trade till it breaks resistances. Amar, you got a comment on these 3, starting with Bombay Burma, then McDowell Holdings and UB Holdings.
Yes. As far as Bombay Burma is concerned, last week I would say last 2 weeks it had touched a high of 607.8, and then previous week it was 613.7. So what we are seeing is that Bombay Burma is showing an upside to the last since second week of August from 395 400 levels. It's gone up to almost 600 levels. So that's been a 50% rally in Bombay Burma. But we need to remember that technically in the first week of August, it had made a high of 637, 38 levels. So what it effectively means is that the moment Bombay Burma moves above 600 levels, 618, 620, those levels we see profit booking. Yes, those levels are extremely crucial resistance levels. If those levels are taken out, I am saying about 635, 640 levels, then we could see the next leg of rally in Bombay Burma, no doubt about it. As far as Britannia is concerned, as far as United Breweries is concerned, United Breweries, as you rightly said, it did form a base around 700 levels and around 700 levels, and last week it made a high of 858, and currently trading around 850 levels. So there is an upside, but it's not as strong. It is going to meet with resistance at every step. The next level of resistance anywhere could be around. We could be looking at 875, 880 levels and 900 levels. So it's going to find it tough going up. Once these levels are taken out, yes, then we could see next leg of rally. As far as McDowell's is concerned, it's been completely, if you look for the last, I would say, last year, almost 1.5 years, it's been simply trading in a range. On the downside, it's 20. On the upside, it's close to 40, 45 levels. But the recent resistance levels of 33, 34, that has been taken out. And today it's trading around 39, 40 levels. So clearly it has a breakout in there we are seeing a breakout. The key question is the next level is around 44, 45 levels. That definitely should be watched out for, because if that level is taken out, that would imply that it's breaking 2-year highs. So that would lead that the market could move higher substantially. We could see even a 30-40% rally from there, provided it sustains above 44-45 levels for McDowell holdings.
Right. Sharmila, everybody doesn't have unlimited money, so some people will have to sell some things to get into something new. You know, I was just looking at technology stocks, and I mean, you're pretty much making nothing out of them. And I'm looking at the horizon, and I see Mr. Trump. I see people wanting to do everything in their own hometown. 190,000 people, pension plans, pension payments to these guys over a period of years. Has IT to be plucked out of your portfolio to put other things?
Oh yes, I would agree. I mean, if you're talking from that perspective that you have a pool of money which you need to sort of move around, then yes, I think, and to IT, then I would add pharma, because these are the two clear sectors which are going to underperform, I think, for at least the next 2 quarters. So I think from that perspective, you can take a call. If you are that short-term investor and you want to turn around a pool of money, then you should not then therefore be in IT or pharma, but because that is definitely a longer-term play. And as you said, the concerns are going to continue for both, I think, for a while.
Sharmila, thanks very much for joining us and walking us through the fundamentals, Amar. Always a pleasure to speak to you. Head of Advisory at Angel Broking walked us through the technicals today. Market's looking beautiful. So it's 40 points up, but it's not the 40 points. It's the way the rally happened. It's nice and smooth. There's no suddenness in it. So that's the